Hey everyone, Derek John Llewellyn-Davies, aka the Strategy Man. And let's talk to you about raising capital. So a lot of people out there, you may think, oh, I'd really like to raise some money that's going to be game-changing my business. By the way, which it is. However, the question is do you really need to raise it? And if so, where do you go for it? This is big questions, and so many people come to me for strategy or come to the live events, for strategy and capital raising. And yeah, a large proportion of those people actually don't need to raise money. And equally, another big chunk of them do need to raise money and they don't even know they needed to. So let's just unravel this a little bit. Firstly, let me make this really clear. This is one of the most exciting times in entrepreneurial history to raise cash. There is so many options available to us these days, which is also the problem, by the way, because I think a lot of people are confused and they're looking in the wrong places. But in the olden days, it was literally you into the banks, and the angels weren't so popular or so known around the places, and so there was a lot less option. And now we've got a plethora of option available to us, and a lot of times people are literally going to the wrong place to raise the money they need. So first of all, the first question is, if it's so much opportunity out there, first of all, do you need to raise the money? And if so, where? So let's address the first one. Do you need to raise money? Well, if you don't know your numbers, you don't know. So a lot of people come to me and go, oh, I want to raise 100 grand, Derry. Okay, someone says 100 grand, a million, 500,000, 50K. I know they've made it up because it's a very round number. So show me your cash flow and I'll tell you if you need it or not. And that's where the tumbleweed starts going through the place, right? Because most people cannot produce a cash flow. Now, this is not a guess. Cash flow is quite accurate. If you do not have a clear historical profit and loss, if you do not have clear sales pipeline moving forward and predictions, and you don't have a balance sheet where you're looking at your creditors and your debtors, you cannot really have a proper live cash flow. It's impossible. What you've got is some wild-ass guess as a number and some made-up shit for the next 1 year, which isn't going to swing it with some of the investment vehicles, all right? So without cash flow, you really don't know if you need the money. And equally, you might need less or you might need more, because the cash flow is really going to show you the detail of what you need and why. So you've got to know your numbers. God, you see this so much, the Dragon's Den, all those kind of programs. Well, most entrepreneurs are just ripped apart on the numbers because they don't know them. And that needs education, by the way, and this is what I'm here to, I'm a big fan of education in the finance space. You've got to just know this, not just get somebody else to tell you it. You need to own this. So if you then know your cash flow, you really understand the different elements, the four elements as I call them, of I call them the cash quadrant, right? You need to understand your profit and loss, your balance sheet, your sales pipeline, and hence cash flow. If you do not have those pillars in place, it's very difficult to know whether or not you did the money or not, all right? So if you do need the money and you've recognized, yes, I need it, Derry, then where do you go? Well, there's so many options. So bank is one route, but you only go to the banks if you really can show you're a strong business, you've been around a while and you've got profits and you can project profits. And within those profits, you can show you can afford to pay the bank back, right? That's basically it. Because remember, the bank's money is our money. You wouldn't want it. They're not supposed to take risk on us. That's not what the banking system was there for. The second route is crowdfunding at the moment. Now, this is very mixed field. I'm going to do some extra blogs just around this subject, right? But there's so many different kinds of crowdfunding. You've got equity crowdfunding, debt crowdfunding for based kind of loan-based, like Funding Circle, etc. You've got kind of product-based crowdfunding, which is almost like a pre-sale. People don't understand the differences of that, and also you need a crowd in order to crowdfund. A lot of people have been sold a duffel on this and they go, crowdfunding's really easy and we can do it. No, it's not. You've got to have a crowd, you've got to know what you're doing. And also part of this is a pre-sale, right? You need to have sold a big chunk of it, or you need to know that you can sell a chunk of it before you go to the crowds with it. By the way, super exciting platform, massive fan of them for the right people at the right time. But the one that's really not really understood fully, I think, certainly in the UK, is this angel funding. It's one of my favourites, angel funding, because there's this thing called SEIS, Seed Enterprise Investment Scheme, and EIS, Enterprise Investment Scheme, which are massive tax advantages for the angels to invest in you, the business. But again, you've got to know your numbers for the angels. So, and I think, most big chunks of the monies we've raised for small businesses over the last few years has come from the angel routes. And it's one of my favourite routes, but I think a lot of people don't understand it. There's some great players out there in the angel routes, but you've got to know what you're doing, and you definitely need to know your numbers for the angel routes, all right? So First of all, you've got to know your numbers to work out if you need the money or not. Secondly, choose your weapon wisely, because there's so many routes to capital out there right now, which is exciting but also overwhelming. You just have to choose the right weapon for you at the right time. And I'd like to conclude with, a lot of you don't actually need the money. Sometimes we can throw money at the wrong thing if we're not careful. And it comes back to understanding your numbers again, right? You need to know your numbers. God, in business, this is critical. And I mean, I had to educate myself. No one's born knowing this stuff, right? I had to learn what this meant and also what it means for my business, all right? So this is critical. But so many of you, you've got cash locked up in your business. It means you're not your credit cycles, because you can just throw money at something, and if your credit control's bad and your credit cycles are bad, then you've got money sitting in your business, and if you scale that, you're just going to scale the problem. Equally, a lot of you, the underlying business model's flawed. So if you start scaling a poor business model, i.e. the profitability is not there, and if you scale it, you scale a lower profitability, which happens a lot, i.e. you sell more volume, they're lower margins, the business is bust. If you don't understand your numbers, you can actually throw money at the wrong thing and actually build the wrong business, all right? So either way you look at this, get to know your numbers. Now what I've put together a webinar on this topic just for you, right? It's free, it's my gift to you, just to say, get to know this stuff. And if you need to go further, you can come further with us with BGI. We're here to educate in this space, all right? But get to know your numbers. So click below, get onto the webinar, and I'm going to take all of these components in depth. And also there's another series coming up where we're going to hit capital raising in a lot more depth. See you on the other side.